Welcome back. People do chip away at all the things that aren't perfect or they're not good at. I recommend it. I mean, you can't be good at everything. And when you start chipping away at the excess in your life, hey, you get to focus on the things that are important. Ryan Leopold joins us. Welcome back, Ryan.
Great. Thanks for having me, Ben.
How are you?
I'm awesome. How you doing?
Good. There's a lot of questions in financing, and there's a lot of questions in the mortgage world in general. Not every day people go through this process of buying a house, refinancing, and there's some questions I think that go unanswered because people fit in these different boxes, right? So they don't even get to explore maybe the options that are available. Other people, not that they need to. Talk a little bit about the difference between all the types of financing that are out there right now.
Yeah, well, I think the biggest thing is it's just different than it was 5 years ago. And so I think what we found is when I come on the show and I'm trying to find different topics that clients have brought up over the last couple of weeks that have been relevant. So I hear over and over again is clients don't really know where they fall. What's the difference between conforming and FHA and conforming jumbo and portfolio and brokered. And, so I think, part of our job is just kind of cutting through and understanding what their situation is and really figuring out a plan for them. With all the different rules, because there's different rules between conforming and conventional and jumbo and all that kind of fun stuff. So I think it's important to kind of understand where we are with that and get around some of those roadblocks.
Well, you had actually mentioned before about, people come in and they'll say, I'm an FHA loan. Mm-hmm. And they're classifying themselves into something because it's all they know, right? They've essentially chipped away maybe the good stuff. Right? Because they may not need to go to a higher cost loan. And do you see that? Is that one of the big problems is that people try to classify themselves without knowing what's going on?
Yeah. So it's one of two things that I see happen is either A, they've gone online and done some research and figure out, FHA makes sense to me. That's like the only zero down loan program out there, they think. So they go, I'm FHA. Or they talk to a lender who basically takes in their information and gets them pre-approved and says, you're approved for FHA financing. And they said, okay, great, I'm FHA buyer. And then they meet with me and then I said, let's get in there and understand. Let's look at the positives and negatives between conventional and FHA because there's distinct positives and negatives with both strategies. So then we get in there and like, well, gosh, FHA is like the worst strategy for me given my situation. I'm like, yeah, look at these options over here. So it's really just kind of getting through and figuring out what's the best for everybody's unique situation.
And when you start looking at those unique situations, I know that, you look at conforming versus jumbo loans. We lost a jumbo investor in ING with brokers and correspondent lending. So you end up with these different boxes that people just fit in or they think they fit in. Mm-hmm. Do you see the same thing with jumbo loans and versus conforming and?
Yeah, so that's like a different kind of loan program as well. So anything that's kind of over at least in this area, 417 is conforming loan amount, 417 and below. 417 to 506 is considered conforming jumbo, so that's kind of plays by one set of rules. Then anything with a loan amount over 506,000 is now considered jumbo. And that just becomes a lot tougher. What I tell people,
especially because you can't buy a house on the east side really, or in like Kirkland, Bellevue for under $500,000.
Yeah, so most people who are buying west of Bellevue are either buying in cash, I'm guessing, or they're financing at the higher loan amounts. So one of the two. So we got to figure out in the jumbo world, how can we make it work? It's just, like I tell people, 95% of most loans are done in the box of conforming FHA, VA, kind of the normal traditional stuff. Anything that's now jumbo is in that 5% category. That is just a different process where we have to make sure that there's a handful of lenders that do loans, do jumbo loans, and each lender is a little bit different regarding their rules and guidelines and what they do. So it really takes, I think, knowing exactly each lender that's available and what their programs are, because those programs specifically will cater to each individual person's scenario and what they're trying to accomplish when it comes to rate and payment and all that kind of fun stuff.
The fun stuff of rates and payments, right? Just what everybody loves, getting their mortgage bill in the month. Or in the mail every month. Talk a little bit about the differences and how these different programs affect the end consumer when they're looking to buy a home.
Well, I think it just comes down to affecting the end consumer is going to be what that strategy ends up being. So if you buy, say, $1 million house, are you going to put $400,000 down and do a conforming loan and get your interest rate kind of lowest of the low? Or are you going to put the minimum down, let's say 20% down and go with, a fixed versus an ARM And you're going to have significant rate differences these days, especially in jumbo, between a 30-year fix and, let's say, a 5 or a 7-year arm. So I think it really just comes down, and everybody's a little bit different, that we work with a lot of clients that'll come in and they'll put 20 or 30% down, do a 7-year arm, knowing that they're going to have that home paid off in 7 years because they have a plan behind it. And so a lot of times on the jumbo stuff, we end up working really closely with their financial planners to come up with a strategy on the mortgage side to accomplish whatever goals and objectives they have. So everybody's different, everybody's unique. And I think, not only having a financial plan, but a mortgage plan in place is crucial to help you get from where you are to where you want to be, moving forward.
Yeah. And the other thing you had hit on earlier, when we were doing our show prep was, you have say a jumbo loan, but then the smallest little things can throw it out of whack. Yeah. I mean, you could lose 2 points on your credit score, and now suddenly it's a whole new ballgame.
I couldn't. And this really just kind of stays with the overall theme of your show, and the overall theme of what we've talked about on the mortgage side of things is you have to meet with a professional. You have to sit down and really have a relationship with that mortgage person. That way they can help you every step along the way. I had the perfect client. We've been looking for a house for 8 months. He's looking for an $8 million house. He's putting 20% down. He's a jumbo loan guy. Okay, we've known it from day one. Perfect credit, works at Costco for 25 years, makes a ton of money, has a ton of money in the bank. The perfect client. He got a parking ticket and did not know it. He got it under contract. We pulled a new credit report. And 6 days before that, he got a parking ticket that went to collections, and his credit score went down like 80 points. And literally, that went from our pool of options for jumbo financing from about 7 lenders to 1. And it was crazy. And he's the perfect buyer. And a lot of these jumbo
just another reason to hate the lady with the parking tickets.
It was amazing that one thing could affect it that much. But we found a solution. But really, we had to go back to the drawing board and really kind of cipher through what each lender is willing to do and not do, and come to we came up with a solution that's going to work. But that was a unique situation that that we see from time to time.
Knowing, I think you hit on a big key point when you talk about that relationship, because right now, especially, the buying cycle is long. Anna could probably attest to that. You don't just go buy a house and then you get it and then you close 30 days later, typically. You go out, maybe you find the house, maybe you don't. Maybe it's a short sale, maybe it isn't. Maybe there's multiple offers, maybe there isn't. There's so many dynamic pieces. But throughout this time, your financial picture can change. If you don't have a relationship with your lender, that, I always say your pre-approval is good until something changes.
Well, it should be interesting is the timeline that we've seen over the last couple of years has been, a buyer, at least that we work with, is maybe 3 to 7 months they're going through the buying process. They get pre-approved, they're out looking for properties, making a couple offers, and finally find something that's perfect to them. And it seems like up until January, February, they were trying to find that perfect house. So they were kind of weeding through all this inventory that was out there. And because of the relationship they had with us, is they were constantly meeting with us to get reapproved, to talk numbers, to talk about any changes about their financial position. But now I'm kind of interested what the market's going to be like. Is the timetable actually going to be the same and expand now that there's a little bit less inventory and more buyers coming to the market because it's actually getting hotter and the confidence is higher? So it should be interesting that what kind of change we have from a couple months ago to where it is kind of moving forward.
Right. Well, and when you start thinking about finding that home, depending on what way the market goes, as time goes on, so do loan programs change. So do the boxes you fit in change. Rates change. It's such a dynamic world that you work in and I work in that you have to be, you can't understand it all just because you're buying a house.
I think,
as the borrower, as the buyer.
As the borrower, the buyer, now more than ever, I think they need the relationship of not only a great real estate agent who specializes in specific neighborhoods. I've been saying that for years. There's agents who say, oh, yeah, I'll go up to Fife and then I'll go up to Marysville. I can tell you it doesn't make any sense. But on the lending side, it's the same thing. FHA seems like it's changing every 6 months. So if you're pre-approved back in October, it could be a way different pre-approval now just based on rates and guideline changes and everything else. And then we have jumbo lenders just go away in one day.
One day,
they're just gone. And it's still happening there, too. So I think that relationship with the lender and being accessible and kind of walking them through all the changes as they actually eventually lead up to actually buying a house is crucial. Like I said, now more than ever.
Well, Ryan, we do have to go to break, but when we come back, we are going to be joined by Jane Hodges, whose new book, Rent versus Own, is out, and she can help explain a little bit more about what these buyers are going through when they're deciding to rent or own or buy the right house or finance it the right way. That's Ryan Leopold. Thanks so much for joining us, and Jane Hodges is coming up right after this break.